Hey, this is Mike Byrnes with another interview of a really prestigious RIA that is doing great things with AI. I am here to share what I can learn, and I'm sure everyone's going to be really interested as we all kind of see that AI is going to be revolutionizing a lot of stuff. The real quick sentence on who I am: I've been published 500 times. I'm a national speaker and a consultant. You can go read more about me at Burns Consulting if you want. But I really want to turn it over to Brent, who's the guy everyone's gonna be tuning in to learn from. So Brent, take it from here. Like tell us a little bit about yourself.
Yeah, thanks for having me, Mike. Brent Brodeski, founder and CEO of Savant Wealth Management. We're a national RIA. Started back at the end of '92. We are about 850 employees. I think last I checked, we were in 28 states, had just shy of 70 offices. Also have a significant accounting business that we've built over recent years, so about 170 accounting professionals. Manage depends on the day, but about $55 billion, covering mass affluent, high net worth, ultra high net worth, really creating that one-stop shop platform for our clients, that incorporates investments, financial planning, tax, wealth transfer, trust services, sort of cradle to grave, right? Whether it's helping somebody figure out how to retire or managing multiple generations of wealth, and in a manner optimized to a family's vision and goals.
That's great. And I had said in the pre-interview that Chuck Bean, a good friend of mine, was recently acquired. I think it was a $4 billion RIA. And we were at lunch, and he said, what you were doing was so great at your firm related to AI. So I was super excited to get you on this recording. And I'd love to maybe tell me just a little bit of what your big picture is for the industry, and then we could drill down on specifically what you're doing at your company.
Yeah, so I think of start out with Frank Sinatra. Frank Sinatra, did he move speakers? Did he drive trucks? Did he clean venues? Did he sell tickets? Did he run concessions? No. What did Frank do?
Sang like crazy.
He had all these other people do all this other stuff.
Mhm.
There's a lesson to be learned from that. The lesson is that our industry doesn't follow Frank's lead. What do they do? Advisors spend 15-20% of their time singing, or in the advisory equivalent, advising, managing relationships, conveying wisdom, maybe mentoring next gen. I mean, it's maybe 20%. It was Orion recently came out with some statistics, and I might be a little off in the numbers, but it was like the average advisor is only 17% of the time advising,
Mhm.
right? And the best advisors were like 24, 25%. What does that mean? That means most of the time they're doing stuff. They're moving speakers, right? And this really, if you look at, when I started, there was no fintech. I mean, you were really advanced if you had just one, two, three, right, at a computer, right?
Uh-huh.
Not a computer. That was like sophisticated. Well, you fast forward today, and there's thousands, at least hundreds, right? I mean, you look at Michael Kitz's map, and it's like it
Yeah.
keeps getting smaller icons around all the different technology pieces. And the typical advisor, including Savant, you got all these different pieces of point solution software, all these different technologies, whether it's a CRM or tax software, or Jump AI, or you name it, right?
Mhm.
Like a typical advisor, maybe they got 15 different pieces of software they're navigating through in the course of a day. They're the center of that world, and they got all these different softwares. And now you throw AI in there, and there's all these new AI point solutions. So now instead of 15, it's maybe 20,
Yeah.
right? And the reality is we're a professional services firm with advisors who have to cut and paste and move data, and oh, is that in my CRM? Oh, but that's different data in my eMoney or Money Guide Pro, and they're navigating all of this. So they're spending 80% of their time doing stuff that they didn't sign up for.
Mhm.
Data entry, analysis, putting together reports, stuff that's frankly not real high value that clients are never going to get us credit for, right? And so, what I realize is like there is no platform to bring all this together, right? It's that what happens is yeah, there's workflows and there's this, that, the other, but it's traditional workflows are designed around, you know, having a person do something and it gets routed to that person. They do something and that goes to that person. Oh, that person's on vacation, so it stalls out for a week till they get back, or 2 weeks till they get buried. Like that's the traditional way of doing this. And so, when you look at firms like Apple with their iOS operating system, or Microsoft 365, or you look at Amazon Prime or Facebook or Chick-fil-A, like, all different industry, like they're not, saying, hey, Mr. Franchisee at Chick-fil-A, go figure out which software to use to sell chicken. No, they're bringing this whole package together. Or
Hmm.
iOS, if you think about Apple, it's an amazing device. For $1,000 you buy it. For $100 a month you have a subscription. Maybe another $100 a month, for different apps, and you carry around in your pocket, something that includes devices that in the old days would have cost tens of millions of dollars and filled warehouses and didn't work very well.
Right.
And you can pull it out, and it works almost every time. Um, and so, the beauty of it is you can sit now uh, at a stoplight and do work. And so it's pretty amazing the value that creates, for a very little amount of money,
Yeah.
right?
So I want to get more specific with Savant. So I kind of envisioned all these AI companies would pop up, and the existing fintech tools would actually be adding in AI. So eventually everything gets siloed, and it's all these little specific AI tools or solutions. It feels like you have a master plan and maybe orchestrating this or pulling it together, because you have the benefit of having pretty large scale with all those employees.
Yeah. Yeah. So I think that the difference is more of the same, as you just add more apps, right? And you have the advisor being the linkage between these. But the problem is the data is scattered all over the place.
Uh-huh.
It's not in a unified place. I mean, Salesforce wants to own you, InvestNet wants to own you, Thomson Reuters wants to own you. And like the reality is, like, we don't want to be owned by anybody. So really, step one is capturing and organizing the data instead of relying on having every different, point solution have its own data model, and the advisor being the orchestrator of that. Um, I don't want to recreate the wheel. We don't want to create a CRM. We don't want to create, Monte Carlo, software
Yeah.
calculations. What we do want to do is own the data model, right? Which means we're building, the foundation is a data lake, a data estate, where you're plugging the different software into it. Right now, once it's in that platform, that data model, now we can think differently. We can say, all right, let's not just rely on running workflows inside Salesforce, right? Because that's limiting. That's limited to how their data model works and how they're going to process. Yeah, let's use Salesforce, but we're going to build those workflows within our own data estate. What does that do? That means we can take kind of ownership of it, right? We can, create that experience that we want to create. We can now present that to our advisors in a single pane of glass. So instead of having to jump between 20 different softwares, you got one place to go,
So
right? You got like,
have you checked that box? Have you pulled all the
it's in process,
it
right?
is,
So
yeah.
we've committed to a $50 million investment. Over the next 3 years, we're building out a phenomenal platform and product team, and and again, there's the existing fintech, but then it's really weaving all that together into a unified advisor and a unified client experience, where we can present that in really 18 different panes of glass. There's a view for advisors where they work all day, like, and they might be in the CRM, they might be in the planning software, they might be in the tax software. Like, they don't even oftentimes maybe know where they're at, right? Because we're not recreating that wheel. I mean, I don't want to create tax calculations,
Right.
but I want to be able to present that in our single application, if you will. But then there's a separate version for our client service people, because they do different things.
Hmm.
So they don't need to see all of Salesforce. They just need to see the pieces of Salesforce that are relevant to them, right? They
Right.
only need to see the pieces of the custodial, technology that are relevant to them. But then you got clients. There's the client portal. That's another view of this. So think about it as, we're creating what we call WiseOS, and it's all this people process technology, workflows, you know, partnerships, UX, UI, AI, all of this stuff, right? And it's all kind of woven together, and but at the top of the room, there's perches around the room. There's birds sitting on there. One of them is a client bird. One is an advisor bird. One is a
Mhm.
client service bird. One is a miscompliance bird, right? And you got, who all look at the same, work with the same platform, but sort of like iOS, it's only the same the minute it comes out of the box. Once you start, you know, personalizing it, it
Yeah.
becomes your own experience. You could be a 3-year-old, watching your kiddie TV shows, movies, or you could be an 85-year-old checking your stocks and playing bingo,
Yep.
right? It's a personalized experience. So likewise, WiseOS becomes the platform, right, that overlays and embeds all the fintech to create those 18 different functional specialist client prospect experiences that is very tailored to them, right?
Okay.
And so the whole idea is like, let's go back to advisors. As we get this right, instead of maybe singing or advising 20% of the time, like what if they could advise 60% or 70% of the time? You know, 80% of the time, flip it, right? 80-20 thing. So let's like, instead of, doing what they do best 20% of the time and stuff, like now it's 80%. What does that mean? That means they're going to be able to manage more client relationships, but they're also going to be able to deliver better, higher quality advice to those clients.
Yep.
But what does that do to the business? Your organic growth is higher because you're creating more value. You got more operating leverage, so you're making more money. Advisors manage more relationships and revenues, so they make, get bigger paychecks. The overall enterprise is more valuable. So I think there's really very few people doing this. You know,
Well,
Everybody's got intact.
I got to back you up. So, $50 million is a huge investment. How do you come up with that number? How do you create a project plan for that? And then I get what the key performance metrics are going to be, but maybe you could talk specifically about that. So, like, start from the beginning. Like, how did you get this off the ground, and who did you involve? And
Yeah. So we, a couple of years ago, we hired, a couple data scientists and some developers, and started working on the data estate. What I realized was you got me and some of our leaders who are thinking in business solutions and big vision. And then you got, I jokingly call the data scientists and the developers, they're like propeller heads. They're technical, brilliant people, right? But they
Mhm.
speak a different language.
Yeah.
And so what I realized is it wasn't moving as fast because like left to their own devices, like, and they're going to do what cool new technology there is. They're going to do what they think is cool, right? And then we got this vision around what this WiseOS product is and what the business needs are. But what was missing in between was like the product, layer, which is really taking that business needs and translating it into what is this product actually need to be, and then the execution layer. How do we actually, work with the data scientists? How do we work with the developers in India? How do we, work with consultants who maybe do specialized components of this? So the 50 million is really, we said, okay, like, we're there, mostly there with the data model. Now you're never done with it. It keeps evolving, right? But we've got a lot of that foundation laid. But to really accelerate, building this and have a successful iOS of wealth, um, we need to build out that execution layer, and we need to build out the product layer. So we recruited. We haven't released the details yet, but we recruited a really top end, platform manager who's actually moving into a COO role for us, who really is overseeing the overall platform and the build of that. And
Okay.
this is really redefining workflows. It's defining, the outcomes. And then we've just recently hired, again, haven't yet announced officially, but a head of product who is coming from one of the biggest names in fintech, and prior to that, one of the biggest names in asset management. So big guns, right? And so those are the core, but we're building out a whole organization that includes, not only, we got our internal, data scientists, but it's a confederated model. So we've got, a couple different teams in India. We've got a couple different consultants, onshore. We've got our AI team that is mostly dedicated to us. I mean, they're not technically employees, but they're really focusing most of their resources on us. So it's like a confederated model to where, we've built this product vision, and then we built this execution team that includes this confederated model that are a combination of employees inside, consultants onshore, teams offshore, plus obviously the fintech, providers that we've always worked with and will continue to work with.
Okay.
So really, the 50 million is really as we've built this budget. I mean, a lot of it is, that includes, the team internally that we have in our recruiting, but it also includes the offshore resources, but it includes the AI resources, and again, so I think it's we're actually almost 2 years into it on the data side. I believe we will be standing up kind of our MVP in the fourth quarter. And then it'll be an iterative process that I believe will take about 3 years, and then it's probably another couple of years of optimizing it. So
Okay.
it's 50 million as like the down payment over the next 3 years. Probably another 50 million in the subsequent couple of years.
Okay.
Um, but I think the opportunity is huge. Our vision is to grow 4 times in the next 5 years. And so absent having a platform that will allow us to scale, we won't be able to accomplish that. So the investment is really, it sounds like a lot of money on an absolute basis, but when you look at, if we can go from, being, north of 50 to north of 200 million of AUM, and 1.5 billion of revenue over the next 5 years, the value creation will be massive. And the 50 million, maybe 100 million, in years 4 and 5, become, a very small fraction of the value that we create for our clients, our team, our shareholders.
Yeah. So if I understood correctly, I'll try to sum up the benefits of it because that's a huge number. I don't know. Was it 50 plus 50 to the 100, or is it 50
I
plus
think
another
so,
100?
right?
Okay.
My board has approved the 50 million over 3 years. I've already told them we're probably going to be coming back for more at some point.
um, so the benefit, obviously, advisors are more efficient, or even other people within your organization, and so they can take out more clients. So they'll be more profitable, and maybe they share in that value. But then I don't know if you refer to yourself as a roll-up firm or consolidator or aggregator or whatever, but whatever you call yourself, that you're probably going to use this as a competitive advantage, right? To bring in
Absolutely.
other advisors and it'll be part of your talking points.
Yeah, there's 4 ways this creates value. The first is through accelerated organic growth. That's the best way to grow, and it's a hard thing. I mean, the industry is really struggling with organic growth. But if we can create, the way I kind of simplify this is, we create value today. If we deliver 2 units of value, the client only probably perceives one. There's all the stuff we do that we don't get credit for. Then over time, they forget the stuff we did. So it's like an erosion of that 1 unit of value creation, right? Imagine we could actually deliver 4 units of value.
Hmm.
And by presenting this in a client, friendly fashion, their version of this one pane of glass, a portal, we can, log and demonstrate and even quantify the value of this tax strategy, that investment, benefit, this wealth transfer savings. Like now, all of a sudden, if we could deliver twice the value, so we go from 2 to 4, but maybe the perceived value goes to 3. And we keep reminding them of that, which means there's more real and perceived value. Well, guess what? I think we're less prone to pricing issues. B, we're probably going to get more wallet share. C, we're going to have higher retention. I mean, we have high retention anyways, but if we can move that another percent higher yet, that's awesome, right? And we're probably going to get more referrals, right? And by the way, it'll be easier for advisors to close business, because they're going to be able to take invisible advice and demonstrate as even part of the sales process as to what that value proposition. So that's organic. And so, listen, we grow about 8% a year right now, just purely organic, net new revenue. We think this moves us to 10 to 12, right? And so if you compound at an extra 2 to 4% a year, like that's huge value creation. So that's the first. The second is really inorganic. There's about 20 to 25 serious firms that are acquiring. There's probably another 50 that are wannabes.
Hmm.
Um, we, the and most of them are all kind of the same. They have a controlled private equity partner. They're looking to sell in 2 to 5 years, and it's pump it full of steroids, sell to the highest bidder, right?
Hmm.
We're 70% employee owned. We have some outside minority capital. They're awesome, two firms, but we're in a place where they can't ever make us sell a company. They can't ever make us buy them out. They can't ever tell us what to do, but they're great partners.
Hmm.
What that means is we have a longer runway. We can play the 10+ year game,
Hmm.
which means we actually can make this investment where other firms, if you're exiting in 2 years, you're never going to do that.
Right.
So we're in a unique place where we can make this investment because we're principal investors, being 70% employee owned, and reap the benefits that accrue to us. So as we're out competing, listen, there's a lot of firms selling. Some of them are spent oil wells that just want to get a big check and go to the beach. They should go to our competitors. But there's other firms that are like, listen, no, we want to be part of something bigger, better, cooler. We want to roll a material amount of equity. We want to have future bites of the apple bigger than the initial one when we merge, combine with Savant. That's what we're looking for. We're looking for the very curated cream of the crop, not Marines. We're looking for SEAL Team 6. So how do you attract them? You attract them by having a better toolkit that they can use to advise their clients. You attract them with having a better equity story that can compound at a higher rate because we're building higher organic growth, and we're more attractive to the best firms that want to partner, right? So that's the second. If we can get better firms to partner with us, that means our inorganic growth is better, which then drives organic growth.
Okay. So yeah,
The
one
third,
and two.
yeah, the third is operating leverage. So if our advisors don't have to move speakers, they can just sing, right? That means they can advise more revenue, right? And make more money, but the company's going to be more profitable. So our margins can be higher, right? And they're high already, but we think they can even go higher. If we grow 4 times in the next 5 years, the idea is like we're not letting people go. We don't need to do that, but we can grow without adding people as fast.
Right.
So maybe we can grow 4x with only doubling our team,
Hmm.
right? So maybe we're only a couple thousand people instead of, 3 or 4 thousand people
Hmm.
in 5 years, delivering more value. So then the last is really IP. When you look at the market value of these big tech companies that have platforms, their multiples are a lot higher than professional service firms. Now, why is that? Because they have scalability, they
Hmm.
have brand, they have consistent, repeatable processes. Your iPhone experience is the same no matter what state or what country you're in, right? So that doesn't exist right now in advisory. Every office is different. Even firms and we are, a complete integrator, right? So we're one firm, one tech stack, one vision, one brand,
Hmm.
one playbook. But even in that realm, you got different advisors that do it differently, right? Playing with 20 different pieces of fintech to deliver slightly different experiences. We can create that consistent experience. Now you have serious brands, serious scalability, which then means that yeah, we can grow 4 times in 5 years and then double a couple times more in the next years. That means the multiples are higher. Just like the multiples in
Right.
fintech world are higher because they anticipate the ability to grow and drop a disproportional amount of margin to the bottom line. Will be in a similar place. So it's really those four, concepts, organic, inorganic, operating leverage, and then scalable IP that we think puts us in a unique spot. And there's just not many firms in our space. Everybody's going to try to do something to integrate software. Everybody's trying to do data lake light, but truly building a differentiated, unique platform is really hard. And it takes a lot of money, and it takes scale, and it takes a long time. And so that's where I think, 85, 90% of our competitors aren't in a place to even do that.
Yeah. All right. So a quick summary is from Frank Sinatra to operational efficiency to all the other benefits. I'm sensitive to your time. I Is there one thing that you want to leave the audience with, or one question I haven't asked?
Yeah, I think what the one thing is, I think we all inherently understand AI is going to change the world.
Yeah.
I used to say like over 5 to 7 years. I think it's faster than I even imagined. You look at the new quad models, and it's like wow. So I think it's faster. I think our industry is sort of in the dark ages. Yeah, we have fintech, but we haven't created a unified platform experience that many of our other industries have. So I think if let's just say AI completely transforms the world in 4 years, I think our space is in 5 years. I think our industry is in 4 years. I mentioned earlier, we got a large accounting business as well. I think that's even faster. That's 3 years. So I think a lot of people are thinking around playing with AI, but nobody is truly transforming their business. I'm just not seeing complete transformation. So that's where I think the real opportunity is. And I don't think we're the only one that's going to do this, but I think it's less than a handful, right?
Right.
It's 3 or 4. So the real question is like, all right, you can be transformed or be the transformer. And I think there's a few firms that can be the transformers. We hope to be one of those. But I think the thing to think about is how do you approach this? If the world is going to transform, you're going to get transformed. Like how do you either embrace that, resist that, or just let it happen?
Yeah.
I don't. My take on it is I think the universe of who's leading the charge in 5 years, frankly, is going to look a lot different than it does today,
Yeah.
right? And how do you get into that short list? Whether that's building it on your own or partnering with somebody that's building it.
Um, Brent, this has been a wonderful use of time. Thank you so much for all the insights. I can't wait to see how your company's already blowing up, but I can't wait to see how you accelerate growth. I think you're on the right path and you have great ideas. So thank you for the time, and I look forward to keeping track and keeping in touch with you.
Great, appreciate the opportunity.
Thank you. Take care. Bye bye.